Recession warnings are flashing everywhere. It's no matter where you look, you're going to see that there is trouble going on in the economy somewhere. In the economy for the future, things that are going on in the government, things that are happening at the banks, things that are happening everywhere. But are they? And that's the real concern that I have right now when I'm looking at the information that's coming out and really scaring everyone. One of the worries that I have consistently about is how much of this is self-fulfilling prophecy, as in we've identified, oh, there's going to be a recession, and enough people think there's going to be a recession, therefore they make decisions that cause the recession, and we don't want to see that. So again, for those that don't know, I'm a business coach that works out of West Michigan around the country, and I come live pretty consistently in order to share information that I share with my clients here on YouTube and again around the country. So let's get into it here in a little bit. Once we get into this article here, which is from Seeking Alpha, again, links will be in the description. We're going to talk about how my clients are. Again, we're acknowledging that there are some signs out there, but the kind of the steps that we're taking just in case. But we're not making any sort of drastic, oh, we've got to get out in front of this thing, because my clients, they tend to operate a little differently than most. All right, so with that, again, this is from Seeking Alpha. Are you ready for a recession? And this came out yesterday. And again, I just got back from my conference in Phoenix with my professional group, Pinnacle Business Guides. So I'm back here in Michigan to a wonderful snowstorm. Yay me. All right, now we're going to look at a couple things here, specifically some of the things in the summary. Tariffs on imports from Canada, Mexico, and China will significantly harm U.S. consumers and businesses, leading to higher prices and stifled exports. Yes and no. There's obviously a lot of debate on those, and I don't want to get into that. What we're going to talk about today is the perceived impact. Whether it's in reality or not, today is all about the perceived impact. So we're going to say this is a perceived impact of tariffs. Consumer spending, which drives 70% of economic growth, is at risk due to increased tariffs and potentially leading to a recession if not reversed. Okay, consumers are not spending, right? We're going to look at some data to support that. But are they not spending for reasons other than what we think there are? Again, take a look at that. And then we're not going to worry about the, the investor sentiment. This is a Seeking Alpha, by the way, is a website for folks who are investors that they can, and folks that are looking to learn more about companies. And really, it's a chat board where they put some information out. But I thought this was a great way that they summarized this up. Plus, they had some cool charts we want to look at. All right, so with this, we have been bombarded with tariff talk every day this week. Tariffs have been getting talked about, especially with the Trump administration, since before the Trump administration came back. And again, it's had an impact on the market, which it's going to, especially when you talk about those things. Yesterday was the worst day yet, because President Trump revised his previous day statement by affirming that 25% tariffs on Canadian and Mexican imports would go into effect next week, it is now March 1st as I'm coming here live on YouTube. So yeah, they're coming out here pretty quick. And then furthermore, he stated that 10% on tariff on Chinese imports would be doubled to 20%. This now places 20 to 25% tariff on approximately $1 trillion in imports with our three largest trading partners. And it seems to me, again, and this individual, it seems to me that these policies were prudent, stock prices would not be plunging, while bond yield, we're not worried about the bonds, don't worry about that stuff. Long story short is the market, there's still uncertainty, so they're reacting in this way. But again, $1 trillion in imports, that's pretty high. So with this, here's what this is equating to, and I'm going to get to showing where the consumer concerns are at here in a second. These tariffs alone equate to $200 and $250 billion in consumption taxes that the U.S. consumers and businesses will pay on the goods imported, and that's where I wanted to hit here. So the fact that the businesses are going to have an increase in their cost of goods sold, right, and what it costs to actually get their goods so that they can either provide their service or they can then pass those goods on to the American people, is going to have, for many businesses, an impact on what they're going to be able to charge. But not all businesses. It's again, take a look at who's buying what where, and again, you'll see some difference there. So which we're going to get into understanding the difference there. All right, now, Canadian consumers are now proactively avoiding American brands, in part due in part to the president's demeaning rhetoric about their country, which accounted for nearly $350 billion of our imports last year. Recognize that we export as much to Canada as we do the entire European Union, which makes sense, right? We share a border with them. And again, the greatest concern remains on how the U.S. consumer, who is the engine of our growth, right? We spend money, it's what we do, will respond. And before we get into this, one of the things that I just want to keep in mind with everybody is that we have the American consumer. We still have to go buy things. We still have to purchase things, but it's very, very clear that prices have gone up. They continue to go up, but they've stabilized at a really high level, which has a compounding effect of, we're able to make it work for a few months, and then little by little it gets chipped away and chipped away. And what I want to bring up the fact that is right now, and all the data we're going to look at, keep in mind what time of year this data is coming from. Dropping, it's January, February timeframe when this is happening. There is always a seasonal drop in spending when it comes to January. Even year over year, we expect that to actually drop a little bit further, and it has to do with inflation. There's numbers behind it and everything, but understanding that there's a percent that's being spent less because it's January, specifically towards the end of January when all the bills from December and the holidays come through. That is going to have a huge effect on that. It's something my clients, we keep an eye on. We are obviously looking to see how everyone's spending consistently. We want to be able to look at where it's at, but we do take into account the seasonality, and that's something that you don't hear because it gets clicks, right? If you're going to have that. So let's take a look at this. All right, consumers expect Trump's new tariffs to raise prices. How do you expect, again, additional tariffs to impact your household expenses? Will raise the cost of everyday goods 59%. 11% say will lower the cost of everyday goods. Won't have an impact and unsure. So when you look at that, here's the numbers we want to break this out. 59% of the folks are saying it's going to raise the cost of everyday goods. And then we have, what does that number work out to? 30, 42, 41%, right? There's quick math there, 100 minus 59. We got 41% say that there's going to be no impact, unsure, or it's going to lower, which the folks that lower, they might want to brush up on their economics there. But here's the deal, and this is the part where I want to have in here, is that when the consumers are already expecting the price of goods to go up, so what does that signal? What are they signaling to companies? They're signaling that, hey, go ahead and raise prices because we're already expecting it. That's one of the things that when they have these surveys come out is that businesses will take advantage of that. You saw that in COVID as well too. Think back to during COVID that was going on there. We had a large number. People were raising prices and continuing to raise prices into COVID and then out of COVID as well through through a couple of years. And why did they raise prices? Because they could. Because people expected and got used to paying higher prices, and they got used to the prices going up until the point where, well, now no one is raising prices anymore, and there's some issues there. So that's what I'm saying. Businesses will raise prices as long as people are willing to pay them. And if the consumer is signaling like they are here that they expect prices to go up, guess what businesses are going to do? They're going to raise prices because they see it as an opportunity to raise prices. Now, consumers are already peeved about high prices, which the president he has said he would end upon taking office. We all know that was never going to take place. Like, that was simply just talking. Again, we will be moving the opposite direction. If all his tariffs take effect, consumer spending accounts for 70% of the economic growth. Our economic growth is critical to corporate earnings, which again applies back to the stock market for sure. We're not worried about that in this particular piece, although it does have a compounding effect for businesses. So consumer spending is the tip of the spear when it comes to the business cycle. Absolutely, and we always watch it closely. All right, it's something we're always keeping an eye on. Now, if you wait for the labor market to start deteriorating, you have been driving in the rear view mirror for too long. All right, labor, again, it's always consumer spending, then labor market. Like that's what happens. You lose people stop spending. Businesses don't want to get rid of people until they see it consistently happening, and then they start laying people off. Now, consumers are saying that their ability to afford monthly expenses is at the top of the list. Let's take a look at this. So Americans value costs more than making things in the U.S., which is most important in determining a strong U.S. economy. Being able to comfortably afford monthly expenses, then a strong job market and rising wages producing more of what we buy here in the US, growth and innovation, rising stock market. And here's what I would say to this. That is like asking, I mean, in all honesty, what, the people are in a crisis at the moment, being able to afford things. So what are you going to say is the most important? Well, I want to pay less for stuff. That 100%, right? But what's actually more important for a strong economy is going to be producing more more of what we buy here in the US. That's actually when you take a longer term view. And that's the piece that, again, you're asking folks who can't afford things, what would make a stronger economy? Well, that things were cheaper so I could buy more stuff, rather than saying, hey, would better paying jobs and more stability in those jobs, basically in the marketplace, would that be better for the economy? Which, get a longer term view, that's exactly what you want. So again, I always take these surveys with a grain of salt, but you can see this is being used to reinforce the fact that right now people can't afford things. And that is what's driving the way that they feel on different parts here. Okay, so again, go check out this article. Link is going to be in the description here. And what my clients are doing, this is the issue that we have here, is that we are definitely looking at how the consumer is spending. We're looking at we're constantly evaluating what our costs are. So, because again, for forecast budgeting and things, and also for hiring as well, there's a labor rate that we look at. There's a cost of goods versus labor cost matrix that we constantly are reviewing. But with that, my clients, we are not making decisions off of the last few data points. Matter of fact, we are going to take a look at the first quarter. So it's going to be January, February, and March collectively at the end of April, and saying, okay, now what do we need to look at for hiring? So we're not making any hiring decisions for this year going into what is going to be the busiest season until we have a full quarter of what are consumer spending, of what costs are looking like, what travel trends are looking like as well too. Specifically where I'm at in West Michigan, we have a lot of Canadians that come down here on top of the folks that make their way up from from Chicago, Detroit, and around the country to see our beautiful Ludington, Michigan. Go and check it out there for sure. But we're waiting on a lot of this decision making because I don't really trust the seasonality of the data at the moment. Historically, December, January, February are not really good months to look at how people are spending and what they're going to be doing. Because here in our area and around the country, if the weather's really good, spending's going to be artificially elevated because, hey, it's not so bad out. Let's go out and do things. That's not a good indicator of what's going to be happening in our area. So that is the advice that I'm giving to everyone. Make sure you understand your market very well and who's buying your products and services and why they are buying your products and services, because that really is going to determine what data points you need to be looking at. So you should be looking at your correlations between different pieces, right? At different times of the year for your forecasting. And if you're not sure how to do any of that, again, feel free to reach out. summitbusinessguides.com. You can check out, learn more about how I help businesses grow. Go check out there. If you're looking, if you're around the country, obviously I'm there to help. You can reach out to me there. Also go to pinnaclebusinessguides.com and you can learn more about the folks that I work with in my professional group and how they come help businesses grow as well too. So with that, I appreciate everybody who stopped by today. Take care, and I will see you next time.